There is one fucking thing wrong already. And that is that this does not have my fucking face on it. Which, much to many of your motherfucking pleasure, you would realize you don't have to look at it. But too bad. I'm gonna fucking put it on here. It's gotta be. They gotta make this so fucking ridiculous. It's not even on this. There it is. Alright, I think I have to plug this shit back in too. I do. Too many damn devices. Should not have hit that fucking button until this was working. Alright, I plugged the thing in. I should be able to fire it up now. I got it. Hi, dozo. Nan, nan desu ka? Dozo. Alright. It's someone's going to the bathroom, guys. Just in case you didn't know. Alright. Welcome to a short edition of Market Talk, where the hell is this shit? Why is this going twice? Why is there two of them? Alright, well, this thing needs to go. It's gone. I'm dumb. Alright, let's get this fucking thing started. This is Market Talk, which is a temporary little segment in time that you're going to get where I'm going to talk about the stock markets, try to teach you something on here that I haven't taught you, take people's questions, and talk about the general situation in the fucking stock market right now. We're only going to be doing this until Bite Binge gets done with his dinner people. He has some guests at his house, and when they leave, he's going to fucking join me. So it could be like in 10 minutes, or it could be in an hour, but until then, for a while anyway, at least an hour or so before Bite Binge comes, or if he comes, then we'll just switch. We'll be talking about the fucking stock market because there's a lot of things I've learned since I've last talked to you, and then also there's the update on the strategy that I did explain last time and how well it works. Yeah, it's good to be back. I'll be fucking drinking beer and talking about some different shit tonight than normal. We're going to be talking about investing money. You may not have a lot, but you can still do it. There are limitations to what you're able to do in the stock market based on how much money you start with, unfortunately. It's really jacked up. I think I've never fucking graced this topic before, so I'll explain what the limitations are. To buy a stock and have that stock and it owned by you can have any small amount of money as long as you have enough to buy one share of said stock. So buying stocks is the first privilege you have. But buying stocks you can do anytime, and it's totally legal, and you don't have to worry about how much money you have. Selling stocks, on the other hand, is a different story. And obviously, if you buy a stock, you want to be able to sell it. But you have to have $25,000 or more before you will be allowed to sell that stock and buy it again and sell it again and buy it again and sell it again. Any stock, actually, where you buy it and then sell it afterwards. That would count as a day trade if you do it in the same day. And if there are 4 of those that you have in a week, I think, they will stop you from being able to day trade at all. Almost every brokerage in the world is like that, unless you're paying massive fees, which is more money going to the brokerage. which you don't want. So, but there's a federal guideline about the day trading where they have to have $25,000 before they'll let you do it. It's like this requirement. And they have to pony that up for you if if you don't have it, and they're mostly not willing to do that. So anyway, you need 25K in there to be able to day trade, which is the first major privilege that you get for having a lot of money in a trading account. The next major privilege you'll get is that you won't have to pay commission if you have a lot of money in your trading account, because they will be like, well, you've got capital in our brokerage, so you're valuable. So they don't charge you commission anymore at that point. So there's a lot of advantages to having the 25K, but you can still buy a stock and like have it grow over long term, or even sell intraday, like between days, or limit yourself to only 4 day trades a week, and you can still make money up to 25K and get there. I started the trading account I had at 5,000, so you can definitely build it up. But the next privilege you'll get is the ability to get margin. Margin is this loan that you are always qualified to have. It's dangerous, and you have to be very careful with it. I have a lot of recommendations about margin, and the first one is never buy on margin, ever. That is a horrible idea. Basically, you're using funds that are not yours, and you will lose more than you can afford to lose in a lot of cases. You don't want to do it. Use your own money to buy. That's my recommendation. Now they'll give you this margin, and what it'll let you do is it will let you buy more stock shares than you have money to actually purchase, which is fucking ridiculous. And you can play big, and you don't have a lot of money, but it's a stupid idea. I still think so to this very second. So I definitely don't recommend that. I have a paper trading account somewhere here. There it is. It's better background about I can show you some of the shit I'm talking about when I get to that. But I still need to go over these privileges. So there's margin, right? And it is essentially a debt that is yours to use in any way you want. And there's two uses for it. One is for buying more than you have, which I don't recommend, and the other use of it is for shorting stocks, which I do recommend that you do, knowing what you're doing and following rules, which I've mentioned before. If you get this margin, you'll be able to do both of those things. They'll be your new privileges. And I've never used the buy more than you have privilege, because that's stupid in my opinion. But the short selling I do, and there's a bunch of shit about short selling that I've gone over in the past. So I'm not going to get into that. I'm going to talk about options today, because I haven't talked about options. So it's a better topic. But with the privileges you get, as you get more and more money in there, you get more and more margin as well. And margin's good for two things. It's good for being able to do that big amount of buying, and the other thing it's good for is it allows you to short stocks at different risk levels, because the thing about shorting them is that there are some stocks that charge higher interest rates for borrowing it, like very high, and some that are very difficult to borrow, and those have high margin requirements. So the more money you have in there, the more margin you'll have, and therefore you can still short a stock in a reasonable price range where you're not going to lose all your money, and then still be able to do some wild things, which is fun. But anyway, after that, there's really not much else that you get. You do get the ability to do options. That's the other thing. That's the next thing that they'll let you do, actually. So I recently got that. So I've been playing with options for like 4 months now, something like that. I'm certainly not good at them. I've made money, not lost money, trading options, but I'm not good at them. I make more money shorting stocks than I do with options. It's something I'm not experienced with, but I've learned a lot while I'm doing it. And I just want to explain really what they are. So what you see here is an options price board for Heinz ketchup. This is my paper trading account. In my paper trading account, I invested $100,000 into Heinz ketchup, I think a month ago or something. And it is up 7.9%. So my paper trading account has a pretty big gain in there. It's always nice. I don't care. I literally didn't even put a lot of thought into that purchase. But anyway, the reason I'm using this paper trading account is because it's safer for me. I don't have to show my account information and shit. So it's a good thing to use. But anyway, I've got Heinz ketchup fucking shares here, and they're up. So this is an options price sheet, and it has a whole lot of shit in it. And we're going to talk about what all this shit is, what it means, what options are, and why you might want to trade them and might not want to trade them, and how weird it is when you do trade them. It is such a weird experience. They behave so differently than stocks. It's a very interesting environment to be in. Really, it's weird. But anyway, what an option is the ability to buy a contract. So you don't actually buy stocks, you buy a contract. Cloudflare, no, that shit fucking no. I think I dropped that shit at 150. That shit was was fucking bombing. Like I think it still is. I think Cloudflare's like at 80 or something now. Maybe it went up yesterday. I haven't checked since yesterday's little spike. But um, no, I'm not holding Cloudflare right now. And it went down hard, and I knew it would. So I jump ship when things go wrong, I quit. That's one of the disciplines that you have to do. It's difficult, but options are different. That's another thing. My disciplines with stocks don't apply to options in the same way. I don't have a good discipline with options because I don't understand them well enough to make a strategy like that that always works. I'm trying to figure it out. And it's one of those things where the way to figure it out for me is just to use this very small amounts of money and to not put a bunch of money into options. That's been the way I've been doing. I've been buying like a contract or two contracts, and some ridiculous times where it cost very little, 50 contracts, where they're like $5 each or something like that. But anyway, what they are contracts. So this contract says that it gives you the option. That's why they call them options. It's a contract that gives you the option to buy 100 shares of a stock out there in the universe at a price that you set on the contract. So if I said I would like the option to buy Apple stock at $160 2 weeks ago, if I would have done that and made that contract, and that contract expires, it does expire. When it expires, it becomes worth nothing. That's one of the fucked up parts about options too. It becomes worth a goddamn nil. But uh, there's an expiry date to all of these contracts, and the longer the expiry date is, the more valuable the contract is for that reason. So there's that aspect to it. There's this big long play period that you can buy options out years if you want to. It's ridiculous. But anyway, that's another game I haven't played, the long-term options game. That would be very interesting to try to do. But it's such a weird environment. Anyway, so you get these contracts, and again, they allow you to buy it in the future at a set price. So if it goes above that price, you can then immediately take those stock that you bought and then sell them and make all that money. That's what the contract, that's what options are. And if you have enough, that's another thing about having money in the account. If you have enough money in the account, you can actually do that, and you can execute your contract at any time and just receive the shares at that price, and then you can immediately sell them for profit. So you need to have enough money though to cover that contract in your account to do that. If you don't have enough to buy the 100 shares to sell the 100 shares, then you can't take the maximum profit out of an option. So um, that's one thing about them, and that's a good benefit to having more money in the account. Again, is the ability to do that without having to pay someone, because options are full of fees. They're just fees out the ass. They're called premiums, and you can collect them too. It's not just those fees are not exclusive to some group. It's part of the options game is that you can also write contracts and you can own stock and collect fees from people. It's weird. It's a weird environment. I'm telling you. But anyway, those fees are called premiums. I think they should be called fees, but they're called premiums, and it sounds much better when you are writing contracts that you call it a premium. If you're in that game again, then that premium is all you care about. That's what you want to get. So um, that's a whole nother thing. I'll get into that. But right now, still talking about buying options. So you get this contract and you can execute it at any time for that strike price, the price that you decided for that period of time that you have. So the potential for you to make money is very high because these contracts don't cost very much. They cost usually between 3 and 10% of the stock's full value. So when you purchase the contract, you can get this 100 shares of stock, and it's it's far less money than it would have cost you to invest the actual 100 shares in the stock, which you could do also thinking it was going to go up, because that's also an option. That's part of that's the old stock market, you know. But the option thing just makes the amounts of shares ridiculous if you buy a lot of contracts. You could buy 10 contracts and you have 10,000 shares of stocks, profits up or down in these contracts. And it's bizarre because even if you invested a small amount, if the stock moves a huge amount, you're dealing with multiplying it by like 10,000 or whatever, however many contracts worth. You have at least 100 you're multiplying it by. So those profits you get for executing it also are times 100. So if stock goes up $15 over the strike price of your option, then you end up with 15 times 100 or 1,500 per contract you have, like in that case. And it doesn't really matter. It matters a lot what stock you pick actually and why you choose them, but that's what they do. And then you can also do a different kind of contract. That's what I just talked about was a call contract. A call contract is a contract where you are saying, I think the strike price to buy this is this, like I was talking about, and you can uh, get it if it goes above that, you can execute it. That's what I was saying before. There's another type called a put, and a put is like shorting a stock, and you can also short times 100 the same way that you can buy by 100. Meaning, if you set the price at something like 16 $16 or whatever, you've set the price of some stock at $16, and if it goes below $16, you can execute that contract and receive short shares for the amount of $16. So it's a different way of playing the options table on uh, the negative side. And to me, in options, puts have more value. And the reason why, well, there's several reasons why. The first is that you don't have to be saddled with the borrower's interest until it's executed. So that borrower's interest is theirs to have that problem with. Also, you don't have to worry about getting margin called because you can't actually lose more than the value of the contract ever. If you are shorting a stock and it goes up 500% in value after you short it, you have to pay all of that if you sell it. And if you don't have enough money to cover it, the brokerage will force you to close it, and then you will lose all your money. So that is the danger of shorting stocks if you are not careful about it. And the put option eliminates that risk as well from your trade if you're deciding to bet against someone. So it's to me a lot better value because it's taking on those risks. Whereas buying stock, it's really you're not taking on any additional risks other than the fact that the value of what you purchase can go down. And you can buy more than you can afford this way if you really think a stock is going to go up and you want to have the maximum payout for that and you feel like you know it and that you are like understanding that company's vision or something, or that you believe they're coming out with something, who knows what it is that you would have that. But or if you think something's grossly overvalued and stupid as hell, which is actually what I do. I generally look for what is grossly overvalued and stupid as hell, and I make sure it's not on Reddit, and then I'll put against it. And it's it's fun to do, but it's fucked up. It's not like normal stock trading. So say there's the DWAC, the Trump stock. It's not really a Trump stock at all. It's a blank check company that works underneath as an independent entity that actually may not even be able to go through with the merger that it has because of some legal problems involving the timing of their IPO. And the FCC generally does not allow that shit. So I assume that the deal is going to fall through. So I am pretty damn certain that that stock is worthless, regardless of how many people believe in it. It's not That's not how capitalism works. Trump won't have any ties to the company anymore. The company will have all that money, and then people will want out as soon as possible. And that's what I think is going to happen. But anyway, that particular company, you could take a put option and just go out there a very long ways. These are expiry dates, by the way, up here in this area. So you can change the expiry date of an option, and it will increase the price of said option. So now you can see I'm able to go through and I can find options all the way out to January 24, which is crazy. And I could put against it and say at that time I want to buy it for this much. But the premiums for these are pretty high, given how much the stock is actually worth. You're looking at a $36 stock, and you're looking at paying $1,225 a contract, and that is actually like 13. No, it's more than that. It's like 25% of the stock, less than that, but still, that's too much. Like in many cases, to justify it unless you really think the long term is going to be abysmal. But you could do this for say this Trump stock, and you could really bet against it, or you could really bet for it, and then 4 years down the line, you have this thing that you've bought that is either going to be insanely valuable or fucking worthless. And it's interesting. And the whole time, as the contracts expire, you can trade them around. So if you don't like this 4 year contract you have, you can sell it. You can sell it to someone else, and they will take the contract, and you can be done with it. And sometimes they'll pay you more than you paid for the contract originally. So a lot of people just do these contract trades where they trade around contracts and they don't execute their options. And it's a different way to play it too. Sometimes it's very much worth doing that, especially if you're playing toward the very short term, because once those contracts start getting close to expiry, the value goes down regardless of the direction of the stock. It just goes down. All the premium goes away. It just disappears. And in the end, you're just left with these raw options as it comes up to the Friday or whatever day the option expires on. It's usually Friday. Um, and then as it expires, it becomes worthless unless it has been executed. So these fucking options, it's an interesting way to play the stock market. They go up and down at extreme amounts, and they generally go up and down like either 25 or 30% in value very quickly. It's just, especially if you play toward the strike middle, which is, as you can see here, with Heinz being 36.05, it falls right between 35 and 37. So this is showing where today's stock price lines up with these options, and then the strike price goes down and up like this. So that's how you could choose. And this is the call side, and this is the put side, I'm pretty sure. Although I don't use this paper trading much, so I've never actually seen this interface before, but I know what all this stuff is. So anyway, um, you if you have this, the thing is the prices are fluctuating all the time of these contracts. You can't just get one for $1.37. You have to bid for it and ask for it, just like a stock. So they are constantly jumping around and being weird. You could try to day trade them like that if you wanted to. It's just weird though. They are very weird, and sometimes they just go and then if you're close to expiry, the thing is worthless and all of the money is lost. You could sell it for a very, very big loss and someone will buy it. Someone will buy it at probably some garbage price. It may cost less than the fees, but you get rid of it. But it also can expire worthless and then you don't get any money. But that's all you can lose too, is the price you paid for the contract. You can't lose anything else. So at least it's not like a risk to over bet, you know. I hate those kind of risks. So anyway, there are other kinds of options as well as the ones I just talked about. There's also contract writing options. So contract writing options are when you make a covered call or a cash covered put. And a covered call is when you write a contract and you hold 100 shares of a stock. You have to have it. It has to be in your brokerage account. And then you write this contract out. And you can set a premium on your contract, which is an amount of money that you sell it at. So it's basically the selling price. You gain that all. So you are going to sell this contract at whatever price you put on it, and it goes into this shit with all of the other contracts. So if you're not competitive with what you are writing, you're not going to get anybody to buy it usually, but sometimes you will. So you could just write your contract out though, and you set the premium, which is the price that they pay for the ability to do that, and then you also set the strike price as well. That's your choice. You get to choose what that strike price is. So it's a lot of thinking about the stock you own and whether or not you're willing to let someone execute on it and whether or not you're willing to hold it. Those are the things you have to think about when you want to write a contract. If you write a contract, um, if you intend to hold the stock that you have 100 stock of um, long term, writing covered calls is very smart because then you can constantly collect extra money on your investment. If you're not going to sell when it goes down, if you're one of those people, and a lot of those people are around, you should be making covered calls on your stocks and you will gain premium constantly. It's actually an income stream. So that amount of premium will go up and down as the stock goes up and down, but it's still premium and you might as well make it. That's my view on it. As long as you have 100 shares of a stock that you don't intend to sell. But you can't react to market volatility if you refuse to sell your stock. So I've written a couple of covered calls, and one of them didn't go very well, and one of them did. The covered call that did not go well was Cloudflare, and I had 100 shares of Cloudflare, and I put a covered call out on it, and that shit went down and down and down, and I was like, shit, this is ridiculous. And then I pulled the plug on that bitch because you can do that. You can actually buy your contract back, and then you can get out of that whole mess, and then you can go ahead and sell your stock at a loss, obviously, which I did. I lost quite a bit on Cloudflare, but I did not lose as much as I could have. I could have lost a hell of a lot more, but I've got rules, and that shit went beyond the loss amount that I was willing to take. It is. It's it was a good opportunity to buy at that time in my paper trading account. I didn't do it in my real account because yeah, I wouldn't even be happy with this because it was a long. This has been a long trade. This is the thing. When I opened it, I just made that one trade and then I left it because the only reason I would use this paper trading account is to do this, and I just wanted to see what would happen if I put it in there. But anyway, um, covered calls are good if you want to keep the stock, but I am too much of a um, paper cut person. I have paper hands. I'll take a cut. I don't care. I don't want to die. I don't want to lose a limb. So I will graciously take a loss sometimes. It needs to be done. And that the same goes with options, but options the loss margin that you want to do is not the why you can't be a paper cut person when you do options unless you're toward the end. This is the reason. There's all that time where things can go one way or another on an option. It it's just things can go wrong and the value of that contract can go down, but you've got all that time. And time is so insanely crazy when it comes to the markets these days. It just moves everywhere. So at one point, it's very likely that you will actually be able to get money off of the option still. So sometimes you don't want to take a huge loss or even a small loss because of the way that it goes is it's so quick. Options are also such huge percentages. So it's a game of patience sometimes, and it's difficult because you can see something go down 50%, and you're like, damn. And like maybe you paid $1,000 for that shit, and you lost $500. But the next day, if something changes, it will change the same amount up. It's ridiculous. That's toward the center of it. And if things crash into hell, usually you want to take a payout if that happens, or you just let the option expire, or you sell it at a huge loss. And you have to do that probably more toward the end, I would say, to be successful. Unfortunately, I don't like that way of trading. I like seeing when I make a mistake and stopping it, but it's harder with options because if you do that, you're going to end up seeing that percentage you don't want to lose, which is I don't want to lose 5% of anything I do ever. But that you can't do that with options, or you just because of the fluctuation of the price that has nothing to do with even the stock, you could lose that much. It's so different, so fucking different. And the last thing you can do, which I don't recommend anyone do, is you can do a cash covered put, which means that you actually short stocks, cover cash on top of that, so that you can put your margin on it or whatever you have. You can put a whole mountain. You're taking a ton of risk doing this. Um, you put all this margin on it, and then you you short all that stock, and then you hold that shorted stock, which I don't hold shorted stock. I get rid of it very quickly. The the you hold it, and then you sell a contract to put for someone. You take all that risk, and then you set a premium on it. And it's like, why wouldn't you just write covered calls if you were like, it doesn't make sense that you take on all that risk. And yeah, they can sell out of it just like you can sell um, out of a covered call, but you lose a lot more money sometimes in that case. I don't know, it's just crazy. I mean, the amount of loss you could take, you could get margin called too. If you get margin called, they wipe your account. They wipe your whole fucking account. So I would not, yeah, I would not fuck with that. I would not fuck with that one bit. Like it's not me, but some people will do cash covered puts, and some people um, will take all that risk on for you. So honestly, which is riskier? Probably shorting stocks, then, which is the thing I'm quite good at doing. And this is not as risky. And the reason why is the most you can lose is the price of the contract. So it's really not. Um, th- yeah, I wouldn't do it actually with the puts, with the cash covered puts. I don't know what they're thinking, but the other stuff, I think there's a way to manage risk, and it's probably not with options if you want to start with a small amount of money. But you could be really good at options trading and start with a small amount of money. But like I said, usually the account has to have milestones met before you'll end up being able to do this. So, um, yeah, 4 months of experience doing it. I have made money with options, but not a lot. I lost a lot of money with options, is what happened, and I gained it back. And it is, um, it's crazy. Options are crazy, and I'm not good at them. So, let's talk about all this shit here. REITs are awesome. I fucking love REITs. REITs are great. Yeah, that's smart. REITs are such a smart thing because you basically are just collecting rent, but you don't have to deal with any of that shit. It's just, that's really smart. REITs are called real estate investment trusts, and what they are is a conglomerate, it's a mega corporation of property ownership. And they buy and sell properties and rent them to people. And they pay high dividends. They pay often quarterly dividends of 2 to 6%, depending on the REIT and how risky it is. Because, again, there's a risk that they could not manage their finances well enough to do it and stuff. But they start out with, some of them start out with some insane dividend payments. And yeah, if you can manage REITs so that you know if something's going wrong, that you can switch it out and shit, then you can make a lot of money. I do like REITs a lot. I like Blackstone. It's an awful company, but it just pays. It pays every quarter. It's ridiculous. There is a REIT from Michu TV. Let's have a look at this REIT here. Hopefully it's not a porn site. There we go. The True North Apartment REIT. That's a good yield. How often do they pay the dividends? That's a good yield. That's not bad. How long have they been in operation? I don't know. There's no company info stuff. I'd need to know a little more, but that's a good yield. That's for damn sure. It's not expensive either. Anyway, that's excellent. But anyway, that's a great example of a REIT right there, which again is a real estate investment trust. And they are cool, but don't put all your chickens into one basket. So I would not go all in on REITs because the housing market can change at any time. La la la. You'd rather have diversified stuff or cash. Often cash is actually what I like. I usually don't hold overnight. It's just the way I am. But with options, I hold overnight. See, that's the difference with options. It's so much different than the way I normally do things, and it's uh, it's interesting. Makes me break all those rules I made for myself that work. But options are different. All those rules will fuck you if you do these. This is a different animal. So it's just interesting to experience. The market's been fucked this week. Have you seen this shit? Like, have you seen the broad market I'm talking about? It's so jacked up. Like, the Federal Reserve person talks, and then like he starts answering questions, and then it's just like, grrr. It's like he's the fucking mummy, and that the flies are coming out, and it's just like, and then it just comes right back, and then there's more down, and then up, and then Friday it was like up and down, like meme stock, except for with less of the percentage. But it was still that much heavy swinging all the time. It was fucking ridiculous. Yeah, Apple's good. Apple's not the highest it's ever been, but Apple is good, and it definitely had a fantastic earnings, no question. Apple's always been a good stock. I'm biased though, so it's a good stock. I will not get another phone. The iPhone is the only kind of phone I ever want. It's so simple to use, and it's easy, and it doesn't try to be a computer. It's a phone. It's good enough to do a bunch of stuff, but it's still a phone, and I like that. I don't want to have to deal with Windows updates on my fucking phone or anything like that. I don't want my phone to ever be that unreliable. Computers are unreliable as shit, and iPhones are so reliable. And I just won't ever go to any other phone. So for that reason, that is why I believe in them. But yeah, it was a fantastic earnings, and you can buy options on Apple too, or any stock. Like that's the thing about these options. But that was a fucked market. It really was. Oh, it's a monthly one. Michu's REIT is a monthly payment. I love those. Those are so good because you literally get paid every month. It's so good. Like if you like I imagine in retirement a lot of my money will be in REITs because of that reason. And it's just such a good payout and it comes with with steady consistency. And if something goes wrong, you can just bail out of that shit and buy another REIT. But anyway, just I know I'm gonna have to manage them a little bit, but that sounds so much like the way that the retirement portfolio is gonna look because I don't want to deal with actually actively trading all the time when I'm retired because that would be fucking yeah, that would be exhausting. So not gonna do that. But anyway, so they've got bids and asks just like stocks. They've got this last, which is the last sale price, so that's the price. And whether it's up or down is green or red here. Um, Mark is where the estimated value is. The mark change is how much it's changed over time. The intrinsic value, I don't know what this is because um, I do not know the intrinsic value is, I don't know. So, see, only 4 months of trading. Never heard of that shit. It's not on my phone. Um, and then you've got volume, which is how much trading is being done and how many contracts are available. So there could be only 109 of that particular contract, and you couldn't buy any more. Say you're a millionaire and you really wanted to go all in at this thing, there are only going to be a certain amount of them. So um, people will start writing covered calls for you though if you are willing to pay a high price. So they'll come back with covered calls that are really expensive. Anyway, um, then there's delta, open interest, and implied volatility. And I think the implied volatility is something about that premium price and what people are willing to pay for it. Um, I don't I don't know enough about this. There is something I want to talk about though, and we can look at this. So let's talk about the Greeks, which some of this is, and what they are, and that's how I usually see these options. This is the first time I've used the paper trading account here. So let me show you this real quick. All right, these are the five Greeks for fucking options. So delta is the sensitivity of an option's price to changes in the value of the security, meaning the higher that is, the worse that the swings are going to be. And if you want to do some things that are by your gut or that you really think that are going to happen, a lot of times the delta will be high. Theta represents the rate of time decay on an option. So theta is going to get worse as you get closer to the end of the option's expiry date. And it really does devalue the option. It just goes, it evaporates um, the premium amount on it. It's crazy, but that's what theta is. And some of them decay at different rates than others. You don't have to be confused, but these are just things. These are stats. Just think of this. Okay, when you get an option, you understood probably everything else up to this point with the 100 shares and the contracts and stuff. So these are just stats that come with the contract. The contract, these stats are calculated by the brokerage for you, and you can look them up. And I'm sure there's a way to look them up on this fucking uh, paper trade thing. I'm sure there is. I see the delta already, but um, I just don't know where because I don't know where it is. I'd rather talk about these because they usually line up right next to each other when I look at the option, and I like them. So it just tells you how much risk it is and how much you have to like chill and kind of believe in yourself or take the loss later kind of thing because it's it's one of those options are fucking weird. But anyway, um, there, yeah, this shit will help you determine the amount of risk. Some stocks don't move a lot. Some really don't. Those are the ones that will have the lower risk in these. Gamma is the rate of change of delta relative to the change of the underlying security's price. So that is again a volatility measure. So you want this to be low, but you're going to have to find some that have high volatility. Vega represents an option sensitivity to volatility. So again, like Microsoft, for example, is not going to have a high Vega compared to Trump's company, the DWAC, the Digital World Acquisitions Corporation. That that's going to have a different Vega. And finally, rho. I do not know Greek, so excuse me. Um, represents how sensitive the price of the option is relative to interest rates, because there's interest rates in the short selling put options, and those are being saddled by someone, and the interest rates can get very, very high on hard to borrow securities, like 100% per year kind of thing. Like, and that shit gets you percentages per day. It's crazy. That's, again, the dark side when you go into the cash covered puts and shit like that. Like, there's crazy shit going on. But anyway, um, those are the Greeks. So they come packed with everything else about your contract, and you can look at them, and they will change over time. They don't stay the same. So the data is collected, and the value changes. Yeah, the truth about options is that you really should just be thinking about you're going to make a decision about whether you think a stock is going to go up or down, and then you set that time frame, and then you decide when to give up. And when you give up, you take a loss. It's probably a big loss. It's not a small loss because it's an option, and they can go down in value very quickly. And if it gets a win, you decide when you want to take your win in or how much you thought that stock was going to go up. And it can go from win to loss to win to loss a lot of times sometimes. It's crazy. Like, they are crazy fucking things. And you never should put anything in there that you're not willing to completely lose, because that happens. But it's weird because there's hundreds of shares on the line, and sometimes you can buy these dirt cheap options. There was a time that I bought some options, and I had 50 contracts of this option, of this very, very expensive stock. And I paid $5 a contract, I think, or something for it. It was, I don't remember. Uh, yeah, I paid $5 a contract, and I bought 50 contracts. So I do remember. And uh, the price got up to the point. It was a very far out contract. I had a far out strike. Like, I had it way out there so that I could get it for $5. And it's a very expensive stock. It was like trading at 150 or something. It was no, I don't remember. It was, I think it was, fuck. I think it was trading at 170. But it was trading at 160, and then it was on its way to 170. That's what was going on, and I think that when I bought it, it was the the strike price was like, I don't remember any of this correctly anymore, but I think it was like 165. And the point isn't about the strike price. The point is that it came close to the time of expiry for this thing, and the price was getting very close to the strike price. So I was about to possibly make a ton of money. And the brokerage, if you have that many contracts of something that is costing that much and you can't cover it all, the brokerage can take control on Friday or the expiry day and sell your contract without your consent. They can just do that if you don't have enough to exercise all of it. And I didn't realize this. And I did contact them before, well before that, but I was just like, what happens if this happens? I asked them because I didn't know. I didn't know. I wanted to actually ask the brokerage what happens if I just let this roll and don't touch it, and this goes in the money. What's going to happen to it? And they explained that they would be executing a sale of the contract by force before allowing anything like that to happen. It would probably happen on Friday afternoon, which is like anywhere after 12. Basically, they were like they would shut it down. And win or loss, whatever it is, if it was in the money. So if it was in the money like a cent, you would that would be sold. And they would also flag your account And if you get too many strikes, they will not let you trade options if you do that. So you do have to be careful when you buy all these really cheap ones, because you can buy really, really cheap options that cost almost nothing. That ends up with you having thousands of shares. But the thing is, you have to get your results before expiry, or it gets scary with that brokerage firm. So be aware of that shit. I wasn't expecting it, and they were like, "This is a good problem to have, but we do need to deal with this." And I sold that shit. I did not let them do anything with that. But I did make a little bit, but I wanted to have like in the money shares and take that money, but I didn't get to do that. I just had to fucking sell that shit. But I still made off with more than I put in there for sure. So that can happen too. Anyway, that's really all there is that I have to fucking say, unless anybody has any questions about the markets. And then I'm gonna go in to fucking see if Pseudo Shaman's online. Maybe we can get him to join in some fucking PUBG before Bite Binge comes. Because he is fucking coming. I need a beer as well. But anyway, that's my take on options trading. I hope I do come back to a question or two. But if not, we will be moving on to some games. All right. So let's see. I do not see any questions. Yeah, these chairs are fucking awesome. This is my work chair. This is not just a streaming chair. I need to be comfortable. I sit all the time and am at the computer constantly. It's ridiculous. And I need to have fucking back support and I need to feel good, and at least I do when I'm in this chair. It's a very good chair. Hats off to them. I'm glad I bought something expensive. It sometimes it needs to happen. Like, you're in that fucking chair all the time. So at least it's good, you know? That was my justification. Sick, Bite Binge is here. This is perfect timing. It's as if the gods themselves knew that I was done talking about stocks. Joining that call. There he is. It's Bite Binge.
What? No, you've ruined the illusion.
I know. I can barely hear you.
That's because my microphone's down here.
Okay,
I have it on the floor. That's where I like to keep my microphone.
that makes sense. All right, so we'll get you going here. I need to stop doing desktop mode as well. I will put myself in the GameStop.
Maybe stop burping as well. That'd be nice.
I don't think that's a good idea. I need to put myself here.
Look at this. This is the most fucking diarrhea shit. This shit sells on the market. My fucking special dish.
No
Look
one
at
asked you to
this
flash
shit.
that.
This is the most fucking diarrhea shit.
Yeah, sorry, I don't show my gamer room. That's what you see.
Wow.
That's all it's there right now.
Yeah, it's all around you. It's not the way out doesn't have much. If you decorate the back, it would be pretty hype, but it's hard with the door opening out
I
there.
eventually did I tell you my plans? I am eventually going to reconfigure my game room, like what I have another job and stuff, and can afford things again. What I'm gonna do is, you know where my CRT, it's on like a stand.
Yep.
So I was thinking what I could do is maybe remove. What happened?
What do you mean what happened?
It just said you lost your signal on yours.
Lost signal. Are you
Well,
sure?
it just says no signal on your stream, but I guess maybe you did that.
I'm turning on my PlayStation right now and making sure that all the ins and outs are properly working. They're not. Spoiler warning.
Okay. At
And
the same time, my camera randomly disconnected, which happens sometimes.
fun. Well,
I had it
anyway,
happen on.
I knew that was gonna happen. That's the price of jumping in the middle, but it's okay.
But
I don't mind.
Who Shrunk Bite? Am I that small? I'm not that small compared to him.
All right, I've got
Usually he has me too big.
still got a no signal here and here, and I have my PlayStation controller somewhere I have to deal with.
It says Sushum says he's getting on.
Oh, good.
But in any case, what I was going to say is, so in front of me, I mean, I hate. Is it? Let me ask you. Do you think it's kind of nausea-inducing when someone takes their camera and moves it around? Because maybe it's not worth doing. But like the TV in front of me here, like what I'm looking at and playing at.
It's annoying. It's not nausea-inducing. I wouldn't go that
Well,
far.
I don't know.
It's very annoying.
Yeah, so I don't know that I feel like I have a tendency to, yeah, let me show you, but then it's like you're
Yeah,
seeing
you,
this
you do
fucking
have the tendency
clover.
to do that.
Yeah,
it doesn't
yeah,
it
but then
doesn't induce nausea, thank God.
But then you get a
I can
Cloverfield
understand why
experience.
some people might feel that way. I mean, it sure annoys me, that's for sure. But
Okay, so here's my crappy secondary camera.
well, that's my Switch. That's why this is all jacked up.
So there's the arcade cabinet, which, hold on, I know. It kind of goes to my shelves with all my displayed games and stuff. You kind of can only see the high end of it. Above that, I guess all the chroma is giving you the black stuff. That is the problem with doing this when I'm chromed. And then, but what I'm thinking is I'm going to take the CRT and maybe move those shelves. The two that you see there's like a smaller one. You see there's like one shelf on the left, and then a smaller one, middle one, and then like another one the same size on the other side. So I'm thinking about taking out that middle one and the right one, so I can put in something that this CRT here would fit on, and maybe I could put some shelving underneath it and above it, and that would give me some more room, like here in the middle, and I could take this TV here, which is my main TV, which I have in front of my desk here. Yeah, so that's my desk and keyboard,
Damn,
and then take
this
this
is not
TV
good.
and put it up here on this wall.
That's not good. Yep, that's not what we want to see.
So this is another wall, which I've started another section of stuff here. You can see I have my new CRT here, which is all chromed and weird. But it's a Sony CRT commercial one. It's TVU. I can't remember the name of them, the model number. Your thing's really weird and chromed too. I don't know why yours is. Because yours supposedly has a black.
I am having issues. Oh, it's because I'm not in focus. That's why. When I'm in focus, it goes fine. It's about the focal point. Like, it's only when I leave that this happens.
So
I'd have to
what
program
I was thinking is going ahead. I have this like little mini CRT here, which is a 13-inch. I know I'm chromed and weird looking, and then I mount the TV that's in front of me up above this mantle, and so I could have shelving. I don't know, about 6 feet, 5 to 6 feet, and in width, which has the CRT on it, and then have the TV above it. And if I did that, that would mean that my desk would rotate 90 degrees, and then the back view would be this, potentially, without the green screen. Of course, with the door shut. Because I'm thinking about moving the TV and the setup to the opposite wall, basically, of this, that I have the camera pointed at. And mounting this more against the wall. Moving like all the stuff that's in it into the shelving on the adjacent wall, and I think it's gonna be better. But I can't really justify paying new shelving and crap like that right now. I'm unemployed, so I'll have to wait. I was very lucky that my fiance allowed me to get the Neo Geo, but my defense for the Neo Geo is that I've been waiting for one in this area for like years that I could actually go pick up in the Georgia area.
That's awesome. That Neo Geo is dope. I am having trouble with my Elgato. Um, I may need to restart OBS. That would be very unfortunate, but indicative of this. We could change the stream title, obviously, and start a new stream for PUBG and get Pseudo Shaman in here. But um, I'm gonna quickly look at this capture here and see if I can deactivate it and activate it again and maybe make
Well,
it
what
work.
what I could do is start my stream so at least they go somewhere, even though I'm not doing anything. Just so that you just fucking throw them into my stream.
No, we don't need to do that. Like that, it's just you have to be set up with us too. Like no, we're not doing that. That's dumb. The That'll just make this take forever. The the thing we
What do you
should
mean? Rating takes 30 seconds.
hmm? Rating you
Rate, yeah, if you rate me right now, I could go live in the next 2 seconds.
and then you raid me back is what you're saying.
Correct. Yes.
Okay, fine, that works for me.
All right, rating me now then. There you go. Go ahead. It's gonna be so exciting. They're gonna love the black screen they see.
See, I knew you weren't ready for this shit.
What? I'm streaming. I said I'm streaming.
Oh, you
Throw
are.
it
The
to me.
black screen is what you were saying.
Oh, you can throw me onto there. It's fine. Who cares if it's a black screen?
All right, we still need to set up here
All right,
though.
there you are. You're fucking in my stream.